Alright, so today I wanted to make a video about two stocks. One of them I've talked about before, the other one I have not. And they are both in the transportation industries. First things first, if you get value out of this video, please like and subscribe. Really appreciate that. The first one, ODFL, Old Dominion Freight Line. This is one I have talked about before. I really like it. I do think it's a little overvalued where it's at right now, and I'll get into, I think, where I think it is valued. Now, profitability with this company is really, really good. Operating margin 28%, free cash flow 17%, return on equity, return on invested capital, both very, very good. It's easily beat the S&P. Its balance sheet is good. Its current ratio 1.46. It's buying back shares. Current growth is a little bit slow, but in a economy that's slowing, I don't think that's completely out of the ordinary. The dividend I'll get into in a little bit as well. Analysts' earnings are projected to go up 26% in the next year. Revenue projected to go up nicely as well. It is definitely too expensive where it's at right now. I'll get into where I think it's valued in a minute here. As far as the financials go, if we look at its income statement here, if you look at its revenue has grown quite nicely over time. Basically, if you go back 10 years, 2.34 billion, so again, it's more than doubled its revenue over the last decade, which is good. That means it's growing probably 8-9% per year. Earnings has also gone up very nice. It's buying back shares very consistently, which is exactly what I like to see. If we look at its balance sheet, about 1.2 billion in debt on like a $40 billion market cap. That's a very strong market cap. I really like that. If we look at its profitability metrics here, or just all of the metrics, operating margin about 28%. That number's been over 20% for 4 years in a row, almost 5 years in a row now. Free cash flow margin over 10%, net margin over 20%. So operating cash flow margin over 20%. Those are all good numbers. I really like that. If we look at its return on invested capital, return on assets, return on equity, those are all very good numbers. And then we look at free cash flow per share has grown extremely good over the last decade or so. It has come down a little bit recently, but that is expected. And then we look at its current ratio is also very good. So everything looking very good here. Another thing here that I like that I said I was going to mention was the dividend. And if we look at the dividend, it's only 0.52%, but they're growing it over 30% per year. Is that going to be able to be maintained over the long run? Definitely not. But over the short run, I think it is. So that's something, again, with the payout ratio under 20%, I think they're going to be able to grow that dividend very, very nicely, which is one of the many reasons I really like this company. The other one I wanted to get into here is TFII. So if we look at TFII, they're quite a bit smaller, $15 billion market cap. Still, I think that still probably would qualify as a large cap, but definitely not as big. Getting into the insights here, TFII, the profitability metrics are not as good. The return on equity, return on invested capital, all of that stuff, as well as the margins. But if you look at its valuations, it does trade quite a bit cheaper. So although it's not as profitable, it's not, and it is growing about as fast, but it's not as profitable. It does trade at a discount, which is exactly what you would expect. Earnings are projected to go up even more than ODFL, which is one of the reasons why I like it. Its current ratio isn't as good, although they are buying back shares more aggressively. And if we look at its metrics here, its free cash flow yield and its earnings yield are both higher than ODFL, which is one of the reasons why I like it. Getting into the financials, if we look at the balance sheet, they got about 3.7 billion, which is not concerning, but compared to ODFL, that's definitely not as good, considering ODFL is more than double the size and they have less than half the debt. If we look at its revenue here, it's grown extremely well. It's also more than doubled over the last decade. If we look at its shares outstanding, it has gone down, although it's down maybe 10% over the last decade or so. Earnings is actually a little bit kind of all over the place, but it is still trending up, which is exactly what I like to see. Like I mentioned earlier, the profitability metrics are not quite as good on TFII. If we look at its operating margin is still around 10%, which is roughly what it's averaged over the last 3 or 4 years, which is good. It's not great. Free cash flow margin 8%, that's okay. Operating cash flow margin 13%, that's okay. If we look at its return on equity, return on invested capital, those are all strong. 19%, 12%, they're good, not great. And then we look at its free cash flow per share. That's gone up extremely good, which is exactly what I like to see. So I'm not really concerned there. Current ratio is actually back in 2023, it was over 1, but it's always hovered around 1, which is not concerning. I would like it to be a little bit better, but it's not necessarily concerning. And then we look at its dividend here. They're actually growing it faster. Over the 10-year, they're growing at 14%, but over the 3-year, they're growing at 20%. The payout ratio is about 27%. But this one does have a higher earnings yield, so I think a 15% growth rate is probably realistic here. And getting into those valuations, like I mentioned here, going back about 5 years, TFII has grown their earnings 15%. The average PE is just under 16. The latest is actually just under 24. They've grown revenue 15% per year, so pretty solid growth. And then if we look at its, like if I project here, I think it's about fair value where it's at right now, and that is assuming they grow earnings at 12%, which I think they can do a little bit better, but I'm being conservative. They buy back 1.4% a year, which is less than the 2 they've averaged. They grow the dividend 13%, which I think is conservative, and then that assumes they have a 16 PE, which I also think is conservative. That means it's basically fair value where it's at right now. So based on that, I think this one's probably a buy where it's at right now, if anything. If not, you wait till it pulls back 3, 4, 5%. Then I think for sure it's a buy. So TFII is definitely a better buy where it's at right now, I think. And if I get into that, for ODFL, I project growing earnings 10% per year. They buy back 1% of shares, which is definitely less than what they've done. They grow the dividend 20% per year, and they trade for a 25 PE. That assumes they're about 12% overvalued where they're at right now. I think they're both great companies, and I don't think you're necessarily getting ripped off if you buy either of them where it's at right now. But TFII is definitely the better buy where it's at right now. So if I were to pick one or the other, it definitely would be TFII. But I think they're both very good companies. When you look at North America, I mean, we're growing our population. I mean, whether or not it's sustainable is definitely a question, but we're growing our populations very quickly. And when you look at trucking companies, I mean, that's an industry that is going to see very good growth. And the key with that is to find the companies that are actually really good in that industry, because a lot of times there's industries that have growth potential, but are there companies that are actually really good companies? And that's a mistake a lot of people make, is that they assume that, oh, well, X industry is going to grow, therefore it's good to just buy companies in that industry. And I think that's a big mistake that people make, and something you definitely have to look out for. But when it comes to this industry, I think that these are both great companies. They've grown very well. They've done very well in the past, and I think they're going to keep doing very well. So anyway, I would love to hear other people's thoughts. So like I mentioned at the start there, if you get value out of this video, please like, subscribe, comment, all that good stuff, and stay tuned for more.